Alrighty, it looks like we're going to start recording today. So my name is Michael Levin, and I am the owner of GenuineTrading.com, I guess you could say. And while we're going to get ready, we got another couple minutes till we actually start. I've got this little beeping in my background, in my head. I'm wondering, what the heck? Play on hold beeps. I see.
You will no longer hear beeps until someone else joins the conference.
Yay. I don't need to hear those beeps now. Thank God. All right. So what we're going to do tonight is I'm going to do a basic webinar that's going to revolve around how to set up your charts using the freestockcharts.com interface or program. It's free, and you can get that by going to freestockcharts.com, and here's how we do it. We're going to open up a web page, and we're going to bring it in here and double click it, and we're going to go to myfreestockcharts.com, and I'll just click there. And normally what you would do when you go to freestockcharts.com, if you haven't signed up, and again it's the free version, it will connect, and you'll get what they call like a basic screen. I've already put together a couple things with this basic screen, and I have a couple things already set up and some trend lines and some things. But what I'm going to do is I'm going to show you what it's like to actually set up your own screen. But normally you would go right up here and you would sign in. I signed in with an email and a password that I choose. And being I'm already signed in, I'm just going to get right to it here, and we're going to pop up a new tab by just clicking on one of these little windows here. It'll pop up a new tab, and this is the default style as to how it pops up. So I already had it on the S&P. Let's do something simpler. Let's look at Apple Computer. And what this is doing, wait a minute, let's do something that I don't have a whole bunch of lines on. IBM. In fact, what I'm going to do is let me take this to a daily and I'm going to get rid of all of the different little drawings that I have on here first. Boop, boop, boop. And that's daily, and we'll come down here to, oh, there's another one I see. Let's come in here to a 5 minutes just in case. And I don't see anything else that I have there. Okay. So what you'll notice over here is you'll notice that we've got different drawing tools. Over here I have a portfolio already set up with different stocks and their prices. But meanwhile, how this will, your main area here will default to showing you stock prices in the candlesticks, and then right now for volume. So what I do is I take this, see how the arrow changes, and you left click and you can literally grab this and make this a little bit smaller. I like to see more of the chart. Second thing you'll notice is, what the heck is this yellow line? That shows all of today's action. See the number 2? That's August 2nd. This is August 1st. This is the 31st. This is showing me 5 minutes worth of action for each one of these bars. And if I just drew this out a little bit, this would be almost all of just today's action right here. This is yesterday's close. So this yellow bar actually will show me yesterday's close. So if I want to get rid of it, I just go up to settings, and it says here where it says show yesterday's close line. I'm going to get rid of that because I don't want to see that right now. So this is about as plain as can be. But another thing I like to do on plot style is, for those of you who don't know candlesticks, a real candlestick bar, the color is based upon the open versus the close, not the net change of the bar. So it's the open versus the close is how real candles are shown. And I like to see up bars as green and down bars as hollow. So what this means was, at the end of this particular 5-minute bar, we opened here and we closed here. But in between, we went a little bit lower and we went a little bit higher, but this was the close. So this body of the candle is the opening from low to high because it's green. And as you'll notice, we opened up here on the next candle, went as high as this, and then came down, and we closed on the lows, and that's a red candle. So it's basically showing you within this 5-minute period one bar as to what happened? So this thing looks like it broke out nicely, closed here, ran up a little more, but then closed lower. And that was actually kind of bearish, so we kind of trended a little bit lower. These are called wicks, and these are called the body of a candle. And there's many different names for these candles, and there's different what they call ways you can call them. Like this is called a bearish engulfing, because the body of this candle engulfs the body of this candle. It doesn't engulf the entire candle, just the internal, what they call the body, not the whole wick. Here you had a bullish engulfing. Here, this is an inside body of this particular one. So there's different meanings to many of these, and sometimes 2 or 3 of these in a row also mean different things, but that's for another course. These are called Japanese candlesticks, and it's a way to view a chart over time. Now this is a 5-minute chart. I can click this drop-down menu, and I can go as little as 1 minute, and I could view the whole day. I could go out to an hourly and just see, how many hours there were in the day. Usually there's 1, 2, 3, 4, 5, 6.5 hours. It goes from 9:30 to 10:30, 11:30, 12:30, 1:30, 2:30, 3:30, then the last half hour. So this is how the candles are. If you want to get a pure look at the day and go by half hours, this will show you the actual half hours. So there, for the half hours, you've got the opening range. So this is 4 o'clock. This opened at 9:30, closed at 10. This opened at 10:30. Opened at 9:30, closed at 10. Opened at 10:30, closed at 11. So it shows you all these different 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13. An ominous 13 30-minute candles in the course of a day. And obviously at the bottom, you will see these candles are based upon, if we go to volume and we go to edit, the bars themselves, we like to have bars, are plotted based upon whether there's more up volume or down volume for this particular candle. So you're going to see that this was green as a candle, but this was red for volume because this was down from this particular one. So we can go into more of that later. These aren't overly important. And I like to have a moving average that's not a 10 period. That's what they call a 7 period moving average. So this shows me the average moving, whoops, that's 7D. I was going to say that looked a little bit strange. Here we go. Let me delete that. This will show me for every 7 candles what an average range is on the volume. And invariably, you'll see a lot more volume at the beginning of the day and the end of the day than you will at other times during the course of any day. I like to look at 5 minutes on a chart. If someone says to me, Michael, would you review a chart for me? I first will start with the daily chart. I'd like to start out a little bit farther. If I don't know the stock, I may start out at, say, a 3-day and say, okay, what's really been happening over the past couple of years? And as you can see, IBM, from the lows that it reached in 2009, this absolute low was more in December of 08, even though the real lows in the market were marked roughly around the March 9th area. IBM was actually lower during 08. But you can see how over time this has stair-stepped up. We had some recent highs up around the $200 and $6 to $210 range. Over the past couple months, we've pulled down as low during the 3-day period around around July 16th, we were down as low as 181 and change. So is this what they call like a head and shoulders top forming, where this area here looks like is this a shoulder? Is this whoops? Sometimes these don't draw correctly. Is this the head? And is this another shoulder forming? I'll just do this here. So that's how they look at it. Head, shoulder, head, shoulder. And invariably what is drawn is what they call a neckline that normally forms right at the base of what they would call the neck. And if this breaks on the downside, it completes the head and shoulder pattern, and usually you get some sort of movement down relative to how high the head was above this neckline. But again, more of that a little bit later. But I really like drawing trend lines. I like different patterns, visual patterns that we, I like to see. So, so the two things we've got here on this right now is I look at the 3-day, and I'd say, well, maybe this is getting a little tired up here. Then I pull it into a daily and say, okay, what's the daily look like? And what I like about freestockcharts.com is whatever time frame I have, it's going to still keep my drawing tools on the chart. So if this was a 3-day, this will come into a daily. It'll then try and fit itself as well to hourly and so on going down. So another thing I like to look at and say, okay, what like recent history, this is a trend line tool. What you do is you click on here, and what you do is you click where you want to start drawing, hold it down, and you let go where you want to stop drawing. Now what I could do is I could scroll using my scroll button on my mouse, or if you don't have that, you can grab this and move this in. What I do is I now grab by taking up my left mouse. As this is highlighted, I click and hold down, and I'm grabbing it and moving it. So it's right on this line here, and I'm going to do the same here, just grab it down. Now that's a trend line. A trend line is 2 points that are connected by one line. You could draw a trend line area anywhere, as long as 2 lines are together. Here's another trend line I'm going to draw. Boom. I'm connecting this top here to this here. That's a trend line, right? You broke through it, and you came back, and that becomes a line. Anywhere the 2 points come together is a trend line. Don't let anyone tell you different. Now, the key thing with trend lines is when you're drawing them is the chart itself, the movement honoring the lines. You'll see sometimes you'll draw a trend line like this, and then 5-6 months go by, and the stock has been moving. Next thing you know, it moves up here, and it'll stop and pull away, seemingly like, why did it do that? And this trend line, when you draw it out a little bit or extend it to the right, you'll find like, oh my God, this actually adhered to a trend line in the future. This happens a lot. And this is why I find trend lines kind of fascinating. I also like to do some things with trend lines where I will look at one trend but say, God, is this another trend that's developing? See, I'm connected to these 2 lines, but they're the same color, right? So here's another thing I'll do is I'll create a parallel line, and then look what I'm going to do. I'm going to drop this down here, and look, it goes to the bottom here and almost exactly to that there. This is an exact parallel of these 2 lines. Let me see, does this one have another one too? Let me try this one, if this has a parallel. Well, it's not quite a parallel. But what I'm going to do in order to distinguish these better is I'm going to make a change in the color. I can edit the color. I like to use yellow and the cyan color because it's not the same color as the red and the green of the candlesticks. I want this to stand out as much as possible. Now, why did I draw this here and not down here? Because right up here, if this goes out a little bit more, it kind of left that out, very similar to how it left this out as well. Only this came down just a tad more. So these are some ways that I'll draw some trend lines. I'll draw some more later. Like here's one more. I'll just draw one more for the heck of it. What I'm doing is I'm drawing these to match with this and roughly in here. And I'm going to draw this in white. And I think you could see what I'm going to do. So I'm going to draw another parallel line. And look what happens. I drew it from this bottom to these bottoms. And look, it's stuck out a little bit. But this is how you look at different trends in the market. I'm going to pull this up a little bit so I get to see it and squish it up a little. And here you can see at the top and the bottom, you can move these up and down a little bit. The same thing we see this here, I could pull this out a little bit and look at it a little bit deeper. So here is a longer term downtrend that when it broke out, it formed this, and then now this yellow as well. So it's just a different way to look at it. It can be a little confusing at first, but as time goes by, you're going to learn how to see how as these trends change. So that's just something we're going to show you right there. I'm going to go into another one here where we've got volume already, and I'm going to take out this other indicator that I have here, and I'm going to take out other drawings. There we go. We took out all the drawings. And I've got a parabolic SAR. And being that I have this here, I don't want it. I go up in settings, and I get rid of yesterday's close. Now, sometimes I want to know where's today's open. That might mean more to me than yesterday's close. So I can see where the stock is relative to today's open. But I'm not going to look at that. And again, make sure that the candles are based on the open versus the close. Okay, so we're set with this. So on a shorter term basis, I am concerned with where this is relative to today's open. This is where it opened. And there was below, but now it's moving above where it opened. So it's a little bit better. Because sometimes you can have a stock gapping up, and then it falls below the open. And even though it might be up on the day, because it's down from the open, isn't normally that good. It would be a red candle. So let's look at this on a daily basis and see what do I mean by it's a red candle. Now this is a green candle because where it opened, which is 194.16, even though it hit 196.60 and then, went lower and hit as low as 193.02, it finished at 194.46. At 194.46, and you can see this over in this area when I click on this. 196.60, the 194.45 where it closed is 29 cents above the open. So this means even though this had a day that wasn't really that great, it still closed above the open. Here it gapped higher. See where this closed on this particular day, on Tuesday, it closed at 195.98 near the lows. 195.98. Here it opened at 196.96, so it opened up, almost a point from where this closed, went higher, but it closed lower. So this engulfed that action yesterday. So it's kind of no surprise that it went down. Whenever you have what they call a bearish engulfing, meaning it engulfs this body to the downside, usually you get some sort of follow through. Not always, but usually. All right, so again, we've got something similar. I'm going to change this to a 15-minute chart. We're seeing yesterday's open, and we're seeing right now what's some of the volumes looking at. What's another thing that people like to look at? Well, I know what I like to look at are different moving averages. Where is this stock moving relative to other moving averages? Now, let's take this from the IBM. We're going to take it to the SPY. The SPY is an ETF, and I'm going to get rid of all the drawings in here. A SPY is an ETF, or an exchange-traded fund, that is made up of, wow, I got a lot of drawing items on here that I'm getting rid of from all the different ones that I have. It's made up of 500 different stocks within the S&P 500, their prices, and what would that equal if this was being traded as a stock? So you'll see the SPX is trading as if it is the S&P 500 E-mini, 1364.87, but the SPY is trading as if it's an entity, as if it's a stock, and it's traded at 136.66. So this is roughly 10 times the value of the S&P future. It's called the SPY, or the spider. And you'll see that its movement is based upon what the market itself is doing. And this is a 15-minute. Sometimes people feel that where a stock is trading relative to a moving average is important. So whenever I want to go add a moving average, I go up here to indicators. I see a whole list of indicators pop up, and I scroll down, and I go right to moving average. And it says, what do you want the history on? Do you want this moving average on the price, or do you want the moving average of the volume? We always want to click on price. And it will default to a 50-period moving average that's blue. Now, I keep this blue, and I keep the 50 at blue, but I change something. I don't go by what they call a simple moving average. I go by something that's called an exponential average. So what I do is I go up here, instead of simple, I go to exponential, which means there's more credence given to more recent prints of stock rather than the earlier ones. You can even do something that's what's called front weighted, which is even more so. But to me, exponential is it's like a faster moving average, but it's not too fast. I like this line style. I could make it a little bit thicker, or I can make it dashed. Say, for example, I wanted to make it dashed. It's probably almost even better for me to make this dashed because sometimes it's hard to see this when it's this kind of dark blue. So I'm going to leave this dashed. So we can see the 50-period moving average. When this goes above, it's pretty good. When it goes above, it stays above. When it goes below, it's a good point to get out. I also want to add another moving average. I'm going to add a 20-period exponential moving average. So I'm going to go down here to moving average. I want it on the price history. And it's going to pop up here as 50. But I want to edit that. And what I want to do is I want to change this to a 20-period. And I want this exponential. But I want to change the color to magenta. See how you can see that versus the other? So they stand out really well. When the magenta goes over here, that's really probably a pretty good time to buy. And usually whenever the magenta comes down and something falls sharply, when it runs up, the magenta is like sort of like what I call the hand on the head of the little boy, patting the little boy on the head. Good little boy, stay down kind of thing. So those are two of them. The next one that I add is a 100-period moving average. And I usually like to use green for that one. We're going to change this. I'm going to edit. We're going to use green. And that's going to be the 100-period. And that's going to be exponential. Then I add 150 moving average on price history. And that's white. And it's only white because this is how I set it up. And the last one is a 200-period moving average. And I always use yellow for that. Remember, I'm clicking on this, clicking at it. All I have to do is delete the 5, add this. Now I'm at 200, and I'm going to make this exponential. Whoops, I forgot to change the color. Change the color to yellow. So these are my little rainbow effect of moving averages. So I got the 15-period. You can see sometimes so these will come together. They work really interestingly. When something comes below, very often you'll see it come up and look, it'll come back and it'll hold. And as the 20-period moving average rises up, it'll give it support sometimes. And vice versa, on the way down, it will give it resistance. You'll find very often when stocks are running, let's pull up, let's say Google or something, they'll run and consolidate between, here it is, the 100 and the 20 exponential on the 5-minute. But what does that look like on a 15-minute? On the 15-minute, it's a little bit different. See, now it's between the 150 and the 100 on the 15-minute, in between these two. It'll get what we call tweezers. There's a lot of different things to look at with these things. This also has a lot of different lines that I'm actually going to pull out and I'll show you. We did this before earnings. There's a lot of trend lines. So you can see from here to here's a line. This line isn't evident on the hourly, but you could see it was another line. The yellow, you could see, captured these top lines. This blue line went back. It was a very, very strong daily line. But this was, it pulled right up into the apex and hung there and then broke out. Very, very nice breakout from over the 615. This thing ran up to what, 645? 642. Beautiful pop and run there. That's Google. Let's take a look at another one. What about Amazon? Amazon just had earnings, and the aftermarket was trading down. you'll see I have a lot of these lines. Goldman Sachs just recently, you'll see something like this. This is a gap, and what I do is I draw. I'm going to get rid of this. I'll show you how we do this. There's a gap here that I think needs to be filled, so I go down here to where the rectangle is. I hit my left click and I start, and as I'm moving it right, I can also pull it down and pull it out to match where the gap is. I can change it in between here, and I can make this, I can edit the opacity of it. So let's say I want to make this color here, and I want to make this a 30%. See? So if I want to be aware that, wow, I got this big gap coming up right above these moving averages, this thing didn't really run. So next time it comes up there, that might prove an area of resistance again for me. Or if it moves sideways and starts to break out, it's then breaking away from that area. Another thing we like to use aside from moving averages, in fact, I'm going to get rid of all these drawing targets on here by Xing out of all these. I like doing that once in a while, just to see a pure chart. Let's pick something from the crowd. Someone give me a stock that relatively has a lot of volume and moves around a lot. Okay, all right, we're getting some names right now. Netflix, okay, that's very popular. All right, Netflix. I'm going to clean up some of the little arrows and some things I had here. Netflix recently had a big gap down after a nice gap higher, and it's called gapped and crap. Let me get rid of some of these lines in here. But what you could say here is you obviously had a low, two different lows, and I'm drawing this line here, and all I'm really doing is I'm drawing the line between these lows and down to these lows here. You can see that there's the low here, and then once it broke out, once it broke down below there, like it kept going. You know, right off the bat, your line of demarcation was roughly around 60. That break of 60 brought it down like another 10%. I know it's below all the moving averages. Now that's the daily. You know, let's move it in on the hourly. As you can see, notice right in here, notice that this 20 exponential right on the hourly proved that it couldn't get above there. It proved to be resistance, and it moved away. Just like sometimes when they come down, they run above, it becomes support, and it bounces off of. So this was already showing right in here that that wasn't good. This was support, and once that broke down from that area of support, which was roughly around 56.45, boom, you had another roughly three and a quarter point drop. So at some point, this may gather its own steam and momentum, but it's not showing any strength yet. That's on the hourly. Let's bring it into the 15-minute. I'm going to get rid of this. Or actually, you know what you can also do? You could take and move these around once they're drawn. Now, sometimes also you can, an opening gap, sometimes you could draw, you can ignore some of these opening gaps, not all the time. You just like to see how many of these fit, the lines fit. I would tend to think that, you know, either you could say, wow, well, that's a trend line. Or, and you wouldn't be wrong, but you could say like a trend line that probably has maybe a little more weight to it is something like this. It gets rid of this wick and goes just for these bodies, just for this body in here, and this top here. And it kind of leaves only a little bit of this wick, but these two wicks out. That would be a tighter range of a trend line. Do you follow what I'm saying? So until this breaks through that area, this is proving to be resistance for it. This 50 exponential is moving down lockstep with it. This 20, it'll get through it on the opens, but it hasn't really been doing too well. You might need like a gap down to wash out folks in it. But you haven't been this low in a long, long time. Let's pull out the daily and see when's the last time we've been this low. Well, now we've got to go to the 2-day. All right, it was Thursday, January 28th, 2010. That's when you really broke out. That's when you broke out for the first time in a while. And then we really started that big run. So you could say this was 53.87, or you could say it's $5.38 on its way to 30. You see, there's so many ways to look at stocks that get over the $100 mark. All it is decimal point. You know, is Apple, you know, really $607.79, or is it $60.78? It's the same thing. You could buy 100 shares of one and 1,000 of the other, and you still have that same amount of money at stake. This is why sometimes stocks don't split. You know, you're buying a share of the company. It doesn't really matter what price it is. I don't really agree with that. And that's why Google had announced at one point they were going to do a 2-for-1 split. I'd like to see Apple come down under 100 a share, and love to see them do a 6 or 7-for-1 split. Heck, Baidu did a 10-for-1 split a little while ago. It didn't hurt them. It's when the stock was like around $50, $60 a share, and that thing went up to 152, which is the equivalent of 1,500 back then. That thing's, still tripled. But getting back into what we were looking at initially, and that's let's get back to the SPY, moving averages and volume and trend lines. Okay, so now I'm going to add one of my favorite things to add, and what I'm going to do is I'm going to take this to a 15-minute chart. I'm going to get rid of this. I'm going to show you how I add it. So right now we've got candlestick charts with moving averages. Now this is my favorite, and the way I use this is much different than most people do use it or should use it. I can add an indicator called relative strength, or RSI. There's two different forms. If you have it, I use Wilder's RSI. It's wilder to use. Now, I just happen to like it a little bit better, but I don't like showing this much of an indicator and this much of a chart, so I like to bring it down. I like, like at least a 75-25 kind of view. I'm going to see 75% chart, maybe 25% indicator. So this is showing from the top here 1, 2, 3, 4, 6, 7, 8, 9, 10, 11, 12, 14, 15, 16. And this is showing 1, 2, 3, 4, 5, 6. Yeah, this is good enough here. Okay. Now I get rid of this moving average, and I take this from 14 and I take this to 2, and it's going to seem freaking crazy. What the hell are you doing here? Then I'm going to change this. Instead of as a line, we're going to call it an area. Watch this. I'm going to change this from gray to yellow, and I'm going to change, there we go, the plot color there. There we go. I want you to be able to see, in fact, you know what, I'm going to get, not that color, hang on, there's another color I want to use. There you go. Okay. I want you to see the spikes, so to speak, on these things. Now, what this is showing is the relative strength of this particular vehicle versus the market itself. So let's take a look at Apple Computer on a relative strength basis. And I like to look for what I call divergences. I like where these little areas where it comes down are higher. It's showing me buying is going on relatively than what's going on in the rest of the market. All right, so this should be congruent with this. So this is working with the market. Now, if this is coming down and I see this is a positive divergence. I look for divergences. When a stock is moving up and this is moving down, is a negative divergence. When a stock is flat and this is moving up, it's positive. So again, you want to find something that's different from what you're seeing. I also combine this with something else called a MACD, which stands for a moving average convergence and divergence. I'll show you that a little bit later on an advanced module I'm going to do. But for right now, I'm going to show you, we're just looking for, I call these swoop-ins. When something drops like this and just looks like it's like an airplane coming in for a real steep landing, this shows weaknesses. Okay? And you want to see this on like an hourly and 30-minute basis first. But when these are flat topping like this, is very, very, very strong. Flat tops usually mean there's more to come. Very, very, very strong. Bottoms like that, very, very, very weak. But every once in a while, you'll see something that's, you're going to be able to see, wow, this one was kind of strong on the way up. This on the way down, I'm not really seeing anything right now that's giving me anything that, now, for example, if this had kept going up and this got weaker, you would obviously see that the underlying strength within Apple was deteriorating. So let me look at a couple, let's see if MCP had any of that going on. No, how about Green Mountain Coffee? Netflix. See how here Netflix, this was flat topping early on the breakout. That indicates that there was a lot more strength to go because as this was breaking out. See, again, another thing we also want to look at, what's great is I can grab this and pull this backwards in time. So we could see what did this look like, before it took off. Okay, so here, once you broke above the high of this bar, which was 68.90, and as you can see, the 200 period had been keeping this lower. This break was really nice, and the break of 69 or 68.90 was a buy signal. Got yourself almost a full point. How about on a 15-minute? Nope, I forgot I did something different on the 15-minute that I can't show you the same. Yeah, I can't go out and show you that much the same. 15 minutes, sometimes you will see a divergence. I'm just trying to see, do I see anything that is obvious? Now, as we get going, you'll see, here's something small. Whenever you see something trading at a new low, but these little apexes, like say, for example, see this apex here? Got to look up over here, and when I pop this up, you'll see the RSI2 is 774. Now you're down, and the RSI, it's at 9, so it's moving up a little. Now the RSI here is at 13. This is moving flat to sideways to down, and this is moving up a little bit. It's a little bit of something, but it's, it's not a lot. So I don't really see anything here. Notice as this was going up, these were coming down. So sometimes it's more clear cut, but here, like here, you've got this moving to a higher high, but this didn't. Here you go, 93.04. Here you're at 94.03. So you go higher, but this, as this went to a higher candle, this started going down. It was a little bit of a tell. But when you start seeing this, when this really happens, you'll be able to say, wow, you know what? I better be getting out of this if I'm long, or if I've been looking at it as a short, get your short ready, and then get your area to cover just in case you're wrong. But this is how I use an RSI2. I really think it can really help you. So for right now today, we've looked at how to set up a little bit of the moving averages. We've set up volume. We've set up RSI2. We set up some trend lines. Trend lines, again, they're easy to draw. I'm going to do a lot more trend lines. Sometimes I'll just take a horizontal line and I'll go across, and I'll just draw a trend line as well, or see where do the lines fit. But for right now, this is just some basics. This is Mike Levin at Genuine Trading, and we're going to sign up for right now. Alrighty, you take care.